The Committee on Financial Services would come to order. We are pleased to see that the representative of the Securities Exchange Commission passed security. We don't know about your exchanges, but you're okay on security. And I regard this as important a hearing as we are going to have. Earlier this year, when we began to talk about a stimulus package, there was a lot of pressure on Speaker Pelosi, who had been one of the leaders in the recognition of the need for a stimulus, to get into infrastructure. And it's a very widely supported goal among members of both parties, especially for many Democrats. The Speaker quite courageously and I think thoughtfully said, no, we're going to do something that can be spent quickly, and infrastructure doesn't meet that, but she gave her commitment that we would be working on improving infrastructure financing, because there is an admitted need in this country for bridges and highways and schools and sewer facilities, etc., all of which have to be paid for by the public sector. Today, we're here playing defense because due to grievous misjudgments made by elements in the private sector, the public sector in this country now faces unfair, excessive costs as they try to meet those infrastructure needs. We are all in America capitalists today. We understand the value of the free market system. People in this committee understand the importance of the financial system as intermediaries in our system. But those who have argued that the private sector should be left essentially alone and that public sector intervention would do more harm than good have nowhere been more decisively refuted than in the situation in which the municipalities and the states find themselves. In yesterday's Washington Post, and I ask United States to put this into the record, Alan Sloan notes that he discovered to his surprise that a tax-exempt money market mutual fund is now paying a higher absolute rate than a Treasury fund, even though the one paying the higher rate is taxable and the Treasury fund is tax-exempt. Here's the situation. Municipalities have been unfairly treated by the private sector for some time. I will be giving out this chart. Sectoral breakdown of Moody's rated issuers and defaulters, 1970 to 2000. General obligation bonds, there it is. Number of issuers, 14,775. Number of defaults, 0. Despite that, there has been pressure on issuers to buy insurance. Now, to begin, the insurance for full faith and credit general obligation bonds has been unnecessary. Requiring general obligation issuers of full faith and credit bonds, where the taxing power of the entity stands behind them, requiring them to buy insurance is, as I said yesterday, it occurred to me, and I was fond of it, so I'll say it again, it's like asking a vampire to buy life insurance, because nobody's going to ever have to pay off. The problem is that in this situation, the blood-sucking seemed to have gone in the opposite direction, because the vital substance of these municipalities has been sucked away. And what happened? Mr. Callan from AMBAC had an interview in the Wall Street Journal, and he said, well, the premiums paid by the municipalities were golden. They were AAA and better sources of revenue. But it was kind of slow growth. So what some of these insurance companies did was they took the insurance premiums from issuers that shouldn't have had to pay premiums in the first place and invested them in sophisticated instruments and did it badly. And as Mr. Callan said, when we got into CDOs squared, we were a little beyond what we understood. What happened? These private investments went bad. And who's paying the price? Among others, the municipalities. It is an odd situation in which issuers are now being charged higher interest because they are hurt by their insurers. They are better propositions than their insurers. We've had problems with rating agencies. There have been two scales. Rating agencies have had a separate scale for municipalities than for corporates. Why? Because if you're rated municipalities, and again I'm talking particularly about general obligations, although you can see it's a pretty good ratio in some of the others as well, if you rated municipals the same way you rated corporates, it would be boring because everybody would get super duper AAA. And how do you make a business out of saying everything's perfect? So they get subjected to this separate rating system. This is not a minor technical matter. The cost of schools and highways and sewer treatment facilities and bridges and a number of other important facilities now cost the public more. There are areas where we have made mistakes in the public sector. This is an area where the private sector, left to its own, has made the great bulk of the mistakes, and the public sector is paying the price. So I want to send a message very clearly from myself. I believe a majority of this committee, and I've had some bipartisan conversations on this, this has got to be fixed. We cannot tolerate a situation in which elected officials trying to build schools and comply with mandates from the federal government to improve the treatment of their sewage and build highways and do other important facilities are charged much more than they should be charged, partly because of an initial undervaluing of their credit, and then compounded, adding injury to injury, by the fact that people took their premiums, and since they never had to pay any of those claims, had a lot of money to go invest, invested it badly, and inflicted damage on the public sector. I have to say, I am not one of those who invokes religion in the public sector. People are free to do that. It's not something that I generally do. But for me, it is the time of year when we celebrate the Exodus from Egypt. And I have to say now, as an elected official who is a partner in governance with the cities and states, I want to say to the private sector that has enmeshed them in this set of circumstances in which they're being unfairly penalized when they sell bonds, let my people go. This is a time to cut them loose. And if we got to part the red ink sea, we will do that. But I do not think we can tolerate as a society this situation where people are being required to pay so much. Now, this has not been a traditional federal role. Insurance has been state regulated. That's why we have one federal regulator here and two very able state regulators. But that's not going to continue. I think the federal government has got to be a partner with regulators such as we have here who have been stepping forward. And we intend to listen today, but I am submitting an invitation now. Give us solutions to this. We are determined, I believe, the majority of this committee, and I think the whole Congress, to deal with it. Let me make one other statement now. It's a personal statement, but we spent a lot of time on the ethics rules yesterday, and it was very controversial. I will say this: I intend fully to comply with the ethics rules, so let me take this occasion to tell everybody, no, I'm sorry, I can't have dinner with you, and we can't have breakfast, and if you see me sitting there, you're going to have to leave me alone to read the paper and not buy me a cup of coffee, and that's the new ethics rules, and I can live with them. But I plan today to buy some municipal bonds from the state of Massachusetts. I wish they weren't being forced to pay such a high rate, given that they are, for me, double tax exempt. But given that they are, me as well as anybody else ought to buy them. And I really say that my advice to people, I don't usually do this, you get a great buy in municipal bonds right now. I didn't want to say this before the hearing. I don't want to be accused of sort of influencing, and buying beforehand. But this is an intolerable situation. Some things are more complex than others. This one is clear-cut. We have got to have a situation in which those numbers, I'm told there has been since 2000 one default in the general obligation. It was a default where they were not in full compliance with the covenants, and in fact nobody lost any money, everybody got paid off. So we have got to restore some rationality here. And this is one where the market's got it wrong. The market's a wonderful instrument, and it creates a lot of wealth, but it's not a perfect instrument. And this is a case where if this doesn't get corrected, we will have to intervene. The gentleman from Alabama.